Okay, welcome guys. Welcome everybody. All right, let's get going. All right, guys. So welcome to our live analysis session. Today we have some very interesting stuff to look at this week. And without further ado, let's get into it. So first things first, let's have a look at what we have over all of the pairs that we're looking at. So again, I'll be looking at majors today. All right. So I'm going to start off from a different angle. I'm going to start with the New Zealand dollar, US dollar. Let's go from the D1 here. So NZD USD here. We're in an interesting place. Now, we have very important news to come out this week on the New Zealand dollar versus US dollar. And I'm expecting to see some very strong price action movements very soon. We have an interest rate decision of potentially the price going from the interest rate going from 25 base points or 0.25% up to 50 base points or 0.50%, which to me, unless I've seen, there isn't one that I've seen, but for me, it's the first central bank that I know of to be looking to increase their interest rate, okay, to the 50 base point mark since the coronavirus period, and the only central bank to be doing it, not even the Federal Reserve, which is the world's central reserve bank, hasn't even taken the decision to do that, and they're not looking to do so until 2023. So interestingly enough, to see New Zealand going ahead to do this, as I said, I'm very intrigued to know what are the factors for this, what's the reason for this, and what we will probably see in the future as a result of this. So with NZD USD starting off on the weekly, I am bearish on the New Zealand dollar. What we've seen on the news of the New Zealand dollar for these last weeks, we've had a very strong spike here or induction for a sell, and the market structure at the moment from the short term. Now, my overall bias to start off with is bullish. I do think that the New Zealand dollar is in a bullish structure here. Although there are inefficiencies beneath this area here from 2019, I do think that the price has the chance to actually produce a long. During the coronavirus period here, this order block came into play where the price returned to the other side. We see that this supply zone, which was used for selling, had a strong break above here, and then it returned back into the supply zone to optimize it for demand. And we've clearly seen a very strong bullish run. Now, from this structure here, now the New Zealand dollar, from what we can tell, the bearish structure has been broken to a certain degree. But the reason why I don't use trend lines is because we can't always quantify that so easily. Because again, if I take the most recent swings here, which will be these swing highs here, so number one, and this one also, again, because we don't have a body close above this structure and it's a wick structure, it doesn't mean that the bearish side of this market has completely ended. Although we have had a very strong run up from the New Zealand dollar being at, over half a cent back up to the 70s point, it's still not enough to say that this is completely bullish just yet. Now, if I saw the body of the candle close above at least this high right here, then I will change my mind, because then for sure we have a break of market structure and I'll be more confident in the buy, which potentially from what we can see here may still happen. Now, again, the market inefficiency I'm seeing down here is very simple. We haven't had a return back into this demand right here. When the market did reverse after the very famous crash of 2008 right here, the price didn't return back into this low right here. We didn't see the price return back in this area. So there is a cause for the price to return here at one point or another. But for now, from what I can see, I don't think that's going to happen at the moment. We're going to need pandemic-like situations or crash-like situations for the price to have a reason to get there. I do think the price needs to fulfill the efficiency of this order block, but again, that's not for now. At the moment, just looking at what we have here, in order for us to really say that we have a bullish structure here, we'll need a break above this price point here. So at least a body close above the 75.5 cent mark. Now, if I go down to the weekly here, on the weekly, we've seen a struggle in price. We've had a spike here, which has taken up the high of 2018 and also a return to supply at the same time. Now, I do think that there is a short on the New Zealand dollar to come. I've been saying it for a while, and not a short-term short, but rather a short to mid-term short. So maybe a short that possibly could last for a month or so, a month or two, which is my scope of short to mid-term. But at the moment here, we've been hanging around this supply zone for a very long time. This supply zone created here on the 20th of June. We've had 1, 2, 3, 4, 5, 6, 7 weeks now of selling, constant buying and selling pressure within this area. Now, recently in the last 2 weeks, we've seen that the bullish side of the market has sprung out a bit more, and we're seeing a bit more of the bullish candles right here. Now, we still have very large wicking going on, but these last two candles here give us a picture that we have had the strongest bullish side of the market for the last 2 weeks. Now, how long that will last, it depends on a few things. Now, if for any reason there was a body close above this supply area, then we should be going long. But at the moment, the price is, I would definitely really struggling to make it past this area. And so I'm expecting sooner or later for the price to actually give us a short based on this, and at least come back to some of these lower areas that we saw from 2020. I mean, some of the largest and most obvious areas would be this weekly time frame without getting into specifics, but at least down to here. So I'm expecting to see the price moving towards that mark. Now, let's go to the daily. So on the daily time frame here, you can see that what we have really is in a market accumulation, quite a strong one. And there's so many things that the price has done within this range, buying and selling, that it is a bit messy. All right. What we really want to see is to kind of cut through the mess and go for the actual trade. Now, we need accumulation to be able to understand when the formation of a new trend is. All right. If you ever want to understand why ranges happen, ranges are places and areas that the market uses to be able to build liquidity up and to build a retail trader volume for future inducements and reversals and manipulation. So this is why we will see these kind of factors here. So on that note here, what I am looking for, I'm pulling up the other screen as I'm doing this, what I am really looking for is to see where the market is going to provide a long or a short. Now, NZD-USD, okay, in particular, all right, has a lot of action, both long and short. So to make the decision as to what side we're going to go on is going to really be highly dependent on what we see in the coming days. So for example, at the moment here, I'm going to use trend lines to quantify this for you. Or we have this kind of narrative here when the market is kind of closing in within a range. Now, from the highest point here, we have an A to B swing here, and then we've had this C formation, and the price seems to be weakening down to a point where we could be seeing the price either run these highs or first and then break the low, or the reverse. Now, for me, I don't use chart patterns to trade with, but I think to quantify this in this way, you can see that the market is starting to reduce the bodies of the candle size, or the candle size of the bodies are starting to reduce as time is going on the bearish side, and we see more bullish action. So my first thought is, since we are still in this kind of bullish to bearish kind of movement, will we be seeing a bearish movement? Now, the best way to work this out would be to watch how the price behaves. I would say specifically above the weekly highs and lows. The weekly highs and lows will give us a very good picture as to whether the price wants to pull long or to pull short. At the moment, it's not so easy to tell, okay, because some of the highs, for example, these highs here, have pools of liquidity above them that the price could easily go for. So for me, with looking at NZD USD, it's a very interesting one. And I wouldn't say it's an enigma, but I feel like it's a very good one to watch. Even if I didn't trade this, I would just love to watch to see what happens in the days to come. But for me, because we're still within this weekly supply and we are struggling quite strongly, I'll be looking more for a short. Now, the inducement for a short would be the easiest thing we can go for, which would be above at least this weekly high, and if not this weekly high also. And from that point, I would like to see the price reverse and give us a continuation short. Now, from this angle here, then we will be having an A to B swing and then a C to D swing from that. So I'm watching carefully to see how the price arrives at that point. And this really is my first look into the price to see what we have going on here. All right, now the next pair I'm looking at is, I'm going to go for AUD USD next. Now AUD USD, because we have Australian dollar news coming along, I'm interested to see how the price plays out here. But AUD USD, to me, I'm still bearish on. You can see that the price on the daily has had a very similar accumulation to the New Zealand dollar, where we've been in a, now it is a large range, but still a very tight range for a daily time frame or pair or price action, I should say. We have 135 pips from the highest point to the lowest point, and the range is looking like it's breaking towards the bearish side. Now, for me, again, from the weekly, I see more cause for the reason for price to get to the downside first, and then back onto the upside. Now, I am definitely bullish on AUD USD. Again, we have a different story when it comes to AUD USD. From where we are right here, this demand zone that was formed during the period of when, after 2001, and we had the drop in interest rates and the rich started to get richer and we had the property boom, we saw very strong increases in the strength of the Australian dollar because of many different factors, and some weakening on the US dollar here as a result of those interest rate decisions temporarily, which money was cheap also. So it was a good concoction to make many people rich. Now, during this period of time here, we had a very strong long, but we had inefficiency in the market, which the market would only have an opportunity to come back down to a place like this in a pandemic sort of crisis or some sort of situation. So I would say right now, the spike back into this area here, all right, was the return or the efficiency of what the price failed to do at this low. So when the price spiked back down here, we see the price pushing back for a very strong long. Now here we do have very strong breaks of market structure. Okay, from the most recent swings, we had very strong breaks of market structure. So I don't believe AUD USD is bearish. Okay, of course, for comfortability, the better swings or the higher swing that we can see would be this swing high here. If we saw the body of the candle close above here, which is above the 80s mark, so we're looking roughly around about 82 cents, roughly around this region, I'll be really looking for the price to break above and then give us a return here. So I'm watching very carefully to see what the price is trying to do. But this break of market structure here would be even more comforting to know that we are definitely bullish. Okay, but for the meantime, anyway, we're in monthly supply, and so we should expect the price to push short. And from the monthly time frame here, I'm expecting at least the price to get down to the monthly demand here, which was the real trigger for the break past market structure, bearish market structure, which is here. So if I was to draw this out, this supply zone, which we formed in 2019 into 2020, when we had the coronavirus period and the price crash, the break above and then the return back onto the other side here, this break of supply and return was a key point in history, or the history of the price, to let us know that we've switched from a very supply sidey market or very bearish market into a bullish one. And so I am expecting the return right here. And so I would expect the price from where I'm standing on the monthly to return back into these areas right here. So what can we say from this? On the weekly, what really we should be looking for would be how we can get into the sell. And it looks like our sell trigger was a couple of weeks ago here. And now we should be looking for the bearish side of the market. So this is why exactly I'm looking at the market in this way. Okay. So this range right here of accumulation, the market definitely is building orders for a very strong sell, most likely. And that will give us a very good trade that we can go by. Now, at the moment, the structure here is perfect, beautiful in every way. What we should be looking for is how to get our trades in. And from what I can see on the H4, we might have to opt for a continuation because it looks as though the price has done structure breaks, which have resulted in a bearish movement, you know, for now. So the most recent one being on Friday is that we saw the price take the high of Thursday here and then immediately begin to short through the night into the, well, short all the way into where we are today, basically. So we had the initial trigger of the market movement and then the short afterwards. Now, I don't know if the market would be so kind as to pull back and give us a retracement to this area, but that's why I'm saying that we might have to look for continuation. So I'll be looking very carefully to see now the most obvious continuation that we can go for, since we're dealing with a range like this, would be for the price to give us something like this. So if I go right here, all right, and then I pull back down to here, a return back on the other side here. Once we break this H4 range right here of demand, we can look for entries within this area to continue on the way down. And we'll be looking for quite a neat trade. We'll be looking for the price to pull back down to, if I scroll down here, at least this range right here. So we're looking at about 175 pips of a drop. And that's if we catch it within here. If we catch this higher up, then we're looking more about the 200 mark. All right. So again, some very interesting price action. And this is why I wanted to come up with the Asian US pairs first, because I do believe there is good opportunity on them. Okay. So let's have a look at the rest of the majors here. All right. So USD Cad, let's go for that. Now USD Cad, I'm looking for a sell from this region here. And really basically what I'm looking for is just a return to fulfill market structure on the short side before we push back up for the long side right here. So from here, I'm expecting the price to reach back into weekly supply possibly one more time before a short. I am still bearish on the US dollar versus the Canadian dollar. And I think this return that we've had here for the long really is just the market providing us with a retracement into this structure. So if I was to pull it from this angle, we have an A swing. Here is the B, and this spike here was the C. And so really we should be looking for a short-term long and then a longer-term short. But in order for that longer-term or shorter-term long to happen, we need the price to fulfill certain price action here. So I'm going to go to the daily here real quick. From the daily here, I'm expecting the price to give us a short here and just at least to return back to where we were looking at, which is this region right here, which I'm expecting to see very soon. For now, the price is almost there, quite just a few pips away from the entry. And I'm expecting the price to pull back down to this region right here before we take off for a long. So I'm watching out carefully here to see what the price does. And we'll give you an update. Now, there's multiple targets that the price can go for. We have targets from here, even back up to here as well. All right, for several reasons. So with USD CAD, I'm watching, we've labeled on it quite a bit, and I'm changing the narrative now. And I would like to see what USD CAD can provide for us in these days to come. All right. Now, USD Jpy was an absolutely beautiful trade. Now, I wasn't in it personally, but I had the marking set up for it. Now, USD Jpy, again, guys, was a very simple trade triggered from this area right here of the low. All right. The price gave us a very big burst of liquidity long before eventually pushing short. Now, if I'm looking across here and then at these highs here, let's put this here for you. We had an interesting way the price behaved, where we had an A to B swing, C to D. Then we had an A to B, And then the price looked as though it was going to break market structure, and we've had a C above A, but because it's the weaken of the body, we actually haven't broken the bearish market structure here, which is quite interesting. Okay, now the Japanese yen news being bullish might actually push the price even further down. And I did say to you guys that when I watched at this price action here, there was a few strange things that the price did, which, for example, leaving the liquidity gap here that was never filled was one of them. And just a few things of that sort. Now, USD Cad is definitely a sell. The entry was very beautiful from all the way back up here. And the best thing I can say is that coming into the Asian session, I've seen that the price has made a continuance move, used the H1 demand from here, spiked into it, and just continue going short. So we've been seeing a sell-off all day, not really much buying at all, almost 50 pips already. So what can we do with this? With USD Japanese yen, if you are a USD Japanese yen trader, the best thing you could do at this moment in time is look for a continuation somehow. At the moment, there isn't a clear one, okay? But the price structure to me, since we've had this kind of structure movement here, there's either the price is wanting to go further down lower and give us a more bearish move and come for some lower lows here and even beneath this low, so down to these kind of lows here from back into May. And possibly if the price gets this beneath this low here, then we might see the price take on the liquidity injection that we've seen back in February and March. So I'll be very interested to see what the price does here. I feel like it is very beautiful price action that we've seen displayed here. And both the long and the short are both palpable, but we're going to have to wait a bit more before we make our final decision. All right, Euro USD. Now, Euro USD was absolutely fantastic. For those of you who were around, you knew that I gave you guys the call for Euro USD live. Euro USD was a very beautiful trade. We saw that structure break around this region here. And what we expected was a return back into the order block. We had a return very similar over here. And we see the price took off on Friday, similar to USD CHF short, for a very nice long. Okay. So back down here, the price creating this supply right here and now returning to the demand. I don't believe Euro USD is done. Now, I explain my reason. Now, Euro USD to me is a short. I think that I'm very bearish on the euro at the moment for several fundamental factors. However, what I would say is when we look at the euro here, if I start off from the daily, it will make more sense that we see this bearish structure forming here, and we've had an A swing. So if I pull this up here, we've had a very nice A swing here. Now, capital A means I'm on the higher time frame or I'm looking at macros. So we had an A to B swing here. All right. And then into where we are right now, we haven't had the C return. So looking at what we have here, I'm expecting the price to give us a counter trend trade. Okay, so this is not the major trade direction I'm going for at the moment, but at least back to this supply zone area here, I'm looking for the price to give us a C. And this is why I expected the price to give us this long that it did. Now, where it was, it could have easily broken below, but because we entered into a monthly supply, excuse me, monthly demand actually, then it was palpable for there to be a potential, at least a counter trend trade. So if we go back here and I change the labels here, this is my expectation on the price. And now that we have this movement here, when we get back to this point, I do expect to fall in line with the European fundamentals of bearish fundamentals and also the market structure here. So if I go back to the monthly here, what I was seeing was we were inside of monthly demand. So we still had an opportunity for the price to give us a long. So if I go right here, okay, and I take off this area and I'm going to delete this for a moment. You guys notice here that the price is inside of monthly demand. So there is potential for the price to push up quite strongly long, because this demand zone here actually existed all the way back from October 2020. So it is a very strong area. Although we haven't seen the D swing. So here's the A, here's the B. We've had the C swing here, but then we failed to create a D. So we might be having trend line failure, or the price may be just forming another C and it could actually go long. Okay, but from the higher time frame, we are going bearish. But at least this area of demand is a monthly time frame, very strong. So when we saw this price action movement here, this was a good, perfect trigger for us to look for this long. And again, targets not too long term, quite swingy, but maybe intraday max of from this area here back up to this point right here. You know, waiting for the price to get past this high here and returning here, and then we should be on our way down for the sell. So this is simply why I gave this trade, guys. So at the moment, it looks like the price is trying to find its momentum to continue this movement. And this is why I'm looking for USD CHF at the same time. We've had a nice return so far. I expect the price to give us a little bit more of a pullback. At the moment, the price is hanging around this 30-minute zone and it's had quite a strong reaction to it. So this might actually be the entry for the continuation. But we'll know very much so soon enough. For me, I have my 30-minute areas set out here. And if you want to take this, you want to look for the break above and then the return. So this is really what we're looking for when it comes to Euro USD here. Now, this is all we have time for, guys, on the live stream. So I'll catch you guys on the next one.